Question 1. Which of the following cyber risks is most commonly associated with malicious software used to demand payment for the release of encrypted data? A. Data breach. B. Ransomware. C. Phishing. D. Distributed denial of service. DDoS. Answer: B. Ransomware. Explanation: ransomware is a form of malicious software malware that encrypts a victim's data, making it inaccessible, and demands a ransom for the decryption key. It is one of the most significant risks covered under cyber insurance policies, especially in the context of business interruption and data breach coverage. While phishing, C, is a technique used to steal credentials, and DDoS, D, is an attack to overload and disrupt systems. Ransomware specifically involves the encryption of data and extortion for payment. Data breach, A, refers to unauthorized access to personal or confidential information, but it does not inherently involve a demand for ransom. Question 2. Scenario-based. Mr. Smith, the CEO of a tech company, discovers that his company's customer data was accessed and stolen by a hacker. Sensitive personal information, including credit card numbers, was compromised. Mr. Smith is concerned about the financial and legal ramifications, including the potential regulatory fines. What is the first action Mr. Smith should take to mitigate the situation? A. Contact the company's legal team to prepare a lawsuit against the hacker. B. Notify affected customers and offer free identity theft protection. C. Inform the relevant regulatory authorities as required by law. D. Wait for the hacker to contact the company to negotiate the data release. Answer: C. Inform the relevant regulatory authorities as required by law. Explanation: under regulations like the General Data Protection Regulation (DDPR), HIPAA, and Wyoming's Data Breach Notification Law, companies must inform affected individuals and relevant regulatory authorities promptly, usually within 72 hours after discovering a data breach involving personal information. Delaying this notification, D, could lead to significant penalties and legal consequences. While offering identity theft protection, B, is a good customer service measure. Regulatory compliance comes first to avoid fines. Laws do not require waiting for the hacker to contact the company, D, nor suing them first. They require immediate steps to control and report the breach to minimize harm. Question 3. Which of the following is not typically covered under cyber insurance policies? First-party coverage. A. Data breach restoration. B. Business interruption and loss of income. C. Privacy liability and data protection. D. Crisis management and public relations expenses. Answer: C. Privacy liability and data protection. Explanation: first-party coverage in cyber insurance typically covers the direct losses suffered by the insured business, including costs related to data breach restoration, A. Business interruption due to cyber events, B. In crisis management, public relations expenses, D. To mitigate reputational damage. However, privacy liability and data protection, C. fall under third-party coverage, which addresses claims made against the insured by affected third parties, such as customers or partners, due to the breach or data loss. Therefore, option C is the correct answer. Question 4. Which of the following is a primary reason that businesses purchase cyber insurance? A. To cover the cost of hardware upgrades. B. To transfer the financial risk of cyber incidents. C. To avoid penalties for non-compliance with data protection laws. D. To ensure that internal employees are properly trained in cybersecurity. Answer: B. To transfer the financial risk of cyber incidents. Explanation: cyber insurance is primarily designed to transfer the financial risk associated with cyber incidents, such as data breaches, ransomware attacks, or business interruptions caused by cyber attacks. While hardware upgrades may improve a company's cybersecurity posture, they are not the purpose of cyber insurance. Similarly, training employees, D, or avoiding penalties for non-compliance, C, are important cybersecurity practices, but they are not the core function of cyber insurance. The main role of cyber insurance is to help businesses mitigate financial losses resulting from cyber events. Question 5. Which of the following cyber threats is specifically designed to overwhelm a network or website with excessive traffic, rendering it inaccessible? A. Phishing. B. Malware. C. Distributed denial of service, DDoS. D. Insider threat. Answer: C. Distributed denial of service, DDoS. Explanation: a distributed denial of service, DDoS, attack is designed to flood a network or website with so much traffic that it becomes unavailable to legitimate users. unlike phishing, A, which is designed to steal sensitive information, or malware, B, which typically infects a system to cause damage or theft of data. A DDoS attack disrupts services by overwhelming them with traffic. Insider threats, D, involve threats from within an organization, but DDoS attacks focus specifically on service disruption. Question 6. Scenario-based. Mrs. Thompson, the COO of a financial services firm, is dealing with a recent cyber incident where an employee's credentials were stolen via a phishing attack. The attacker gained unauthorized access to sensitive client information and transferred large sums of money from several accounts. What should Mrs. Thompson do first to handle this situation under the company's cyber insurance policy? A. Report the theft to the insurance company to initiate a claim. B. Immediately contact law enforcement and start an investigation. C. Attempt to recover the stolen funds by contacting the affected banks directly. D. Alert clients about the breach and inform them of the situation. Answer A. Report the theft to the insurance company to initiate a claim. Explanation. The first step Mrs. Thompson should take is to report the theft to the insurance company to initiate a claim. Most cyber insurance policies require prompt reporting of a cyber incident to begin the claims process. Reporting the incident to law enforcement, B, is also important but usually follows reporting to the insurer, as the insurer may have specific requirements for the investigation. Attempting to recover the stolen funds, C, should be done in coordination with law enforcement and the insurance company, not independently. While informing clients, D, is important, it is not the immediate first step in managing the insurance claim. Question 7. Which of the following best describes the role of a cybersecurity framework of ECA's cyber insurance policy? A. It is a set of standards that insurers use to evaluate the cyber risk of businesses. B. It is a list of regulatory requirements that businesses must comply with to qualify for cyber insurance. C. It is a method of calculating premiums for cyber insurance coverage. D. It outlines the specific exclusions that apply to cyber insurance policies. Answer A. It is a set of standards that insurers use to evaluate the cyber risk of businesses. Explanation. A cybersecurity framework provides a set of best practices and standards that insurers often use to assess the cyber risk exposure of a business. Frameworks like NIST or ISO 27001 help insurers evaluate how well a company has implemented cybersecurity measures, while regulatory requirements, B, and exclusions, D, are important components of a cyber insurance policy. They are not the primary role of a cybersecurity framework. Calculating premiums, C, is based on risk assessment and underwriting, but a framework is used to evaluate that risk. Question 8. Which of the following is typically an exclusion in cyber insurance policies? A. Business interruption due to cyber attacks. B. Cyber extortion expenses. C. Loss due to employee theft of sensitive data. D. Costs related to data breach notification services. Answer. C. Loss due to employee theft of sensitive data. Explanation. Most cyber insurance policies include exclusions for losses caused by employee theft, as this is generally considered an internal security issue and not an external cyber risk. Business interruption due to cyber attacks, A. Cyber extortion expenses, B. And costs related to data breach notification services, D. Are typically covered under a cyber insurance policy's first-party coverage. However, theft or fraud committed by employees may be excluded unless specifically covered under a separate employee dishonesty or fidelity bond policy. Question 9. Which of the following regulatory frameworks requires businesses to notify affected individuals and regulators about data breaches within a specific time frame? A. General Data Protection Regulation (EDR). B. Payment Card Industry Data Security Standard (ECESS). C. Health Insurance Portability and Accountability Act (HIPAA). D. Bramich Bliley at GB. Answer A. General Data Protection Regulation (GDPR). Explanation. Under the General Data Protection Regulation (DDR), businesses are required to notify both affected individuals and regulators within 72 hours of discovering a data breach involving personal data. This is part of GDPR's strict data protection requirements. PCI DSS-B focuses on securing credit card data, but it does not require a specific breach notification timeline. HIPAA-C applies to healthcare organizations but has different breach notification requirements, typically within 60 days. GLBA-D requires financial institutions to protect consumer information, but it does not mandate the same specific breach notification timelines as GDPR. Question 10. What is the primary purpose of a deductible ECA cyber insurance policy? A. To limit the amount of coverage provided for certain types of cyber incidents. B. To cover the policyholder's out-of-pocket costs before the insurance coverage begins. C. To ensure that the policyholder has adequate cybersecurity measures in place. D. To set the maximum amount that the insurer will pay for any single claim. Answer. B. To cover the policyholder's out-of-pocket costs before the insurance coverage begins. Explanation. A deductible is the amount a policyholder must pay out of pocket before the insurance policy begins to cover the costs of a claim. This reduces the insurer's exposure to small or frequent claims and encourages policyholders to maintain proper cybersecurity measures. The deductible is not used to limit coverage or ensure cybersecurity measures. C. The maximum coverage limit is typically specified in the policy, but it is separate from the deductible. D. Question 11. Which of the following is true about third-party coverage in cyber insurance? A. It covers the cost of restoring the business's own data after a breach. B. It provides coverage for lawsuits and claims from external parties affected by the breach. C. It covers the business's costs related to implementing new cybersecurity measures. D. It is designed to cover fines imposed for non-compliance with regulatory standards. Answer. B. It provides coverage for lawsuits and claims from external parties affected by the breach. Explanation. Third-party coverage in cyber insurance is designed to cover the legal and financial liabilities a business faces when external parties, such as customers, partners, or vendors, are affected by a data breach. This can include covering lawsuits, settlements, and claims resulting from the breach. First-party coverage, A, addresses the business's own data restoration, while third-party coverage, B, focuses on the external impact. Costs for new cybersecurity measures, C, and fines for non-compliance, D, are typically not covered under standard cyber insurance policies. Question 12. Which of the following scenarios would most likely be covered under the business interruption clause of a cyber insurance policy? A. A customer files a lawsuit against the business due to a data breach. B. A cyber attack causes a company's website to be inaccessible for several days, resulting in lost revenue. C. The business suffers a financial loss due to an employee stealing sensitive data. D. A business is fined for failing to comply with GDPR regulations. Answer. B. A cyber attack causes a company's website to be inaccessible for several days, resulting in lost revenue. Explanation. Business interruption coverage in a cyber insurance policy typically covers loss of income due to an interruption in operations caused by a cyber event, such as a website being down due to a cyber attack, lawsuits, A, employee theft. C, and regulatory fines. D, are generally covered under different clauses or policies, but not business interruption. Question 13. Which of the following is an example of a first-party loss in a cyber insurance policy? A. The business incurs legal fees after a third-party vendor experiences a breach involving customer data. B. A company experiences financial losses due to a cyber attack that disrupts its operations. C. A customer sues a company for damages caused by a data breach. D. A business is fined for failing to report a breach in accordance with GDPR. Answer. B. A company experiences financial losses due to a cyber attack that disrupts its operations. Explanation. First-party coverage in cyber insurance protects the business itself against losses, such as financial losses from a cyber attack that disrupts operations. Third-party losses, refer to external parties affected by a cyber event, while fines, D, are typically outside the scope of first-party coverage. Question 14. Which of the following best describes a cyber liability insurance policy? A. A policy that protects against physical damage to hardware and data. B. A policy that covers losses due to a business's failure to comply with data protection regulations. C. A policy that provides coverage for data breaches, cyber attacks, and related financial losses. D. A policy that insures against the cost of rebuilding a company's brand reputation after a breach. Answer. C. A policy that provides coverage for data breaches, cyber attacks, and related financial losses. Explanation. Cyber liability insurance is designed to cover the costs associated with data breaches, cyber attacks, and related risks. It includes first-party and third-party coverage, such as expenses for data recovery, legal fees, and regulatory fines. It does not typically cover physical damage to hardware or reputational rebuilding, although it may offer some coverage for related expenses in specific cases. Question 15. A business suffers a data breach involving the exposure of personal data for thousands of customers. Under most cyber insurance policies, which of the following expenses is least likely to be covered? A. Legal fees related to defending against customer lawsuits. B. Costs to notify customers and regulators about the breach. C. Costs associated with improving cybersecurity measures after the breach. D. Fines for failing to comply with data protection regulations. Answer: D. Fines for failing to comply with data protection regulations. Explanation: cyber insurance typically covers legal fees A. Breach notification costs B. And costs for post-breach improvements C. Under the first-party or third-party coverage. However, fines related to regulatory non-compliance D. Are usually excluded from coverage. Question 16, scenario-based. A small e-commerce company recently discovered that it was the victim of a ransomware attack. The attack locked them out of their website and encrypted customer data. The attackers are demanding a large sum for the decryption key. The company's cyber insurance policy includes coverage for cyber extortion. What should the company do first? A. Pay the ransom immediately to restore access to the data. B. Report the incident to the cyber insurance company to initiate a claim. C. Contact law enforcement and work with them to track the attackers. D. Inform customers about the breach and ask them to change their passwords. Answer: B. Report the incident to the cyber insurance company to initiate a claim. Explanation: the first step is to report the incident to the insurance company to initiate the claim process. Many cyber insurance policies require prompt notification to trigger coverage for cyber extortion, including ransom payments. Paying the ransom should not be done before consulting with the insurer. Reporting the incident to law enforcement C is also important but typically comes after reporting to the insurer. Informing customers D is essential but not the first step in the insurance process. Question 17. Which of the following is typically excluded under most cyber insurance policies? A. Cyber extortion and ransom payments. B. Data restoration and recovery costs. C. Losses due to internal employee fraud or theft. D. Business interruption caused by cyber attacks. Correct answer: C. Losses due to internal employee fraud or theft. Explanation: most cyber insurance policies exclude losses resulting from internal employee fraud or theft unless there is a separate fidelity bond or employee dishonesty policy in place. Cyber extortion A. Data restoration B. And business interruption D. Are typically covered under cyber insurance policies. Question 18. What is the primary purpose of a rider or endorsement ECA cyber insurance policy? A. To increase the coverage limits for specific risks not included in the base policy. B. To provide coverage for incidents that are excluded from the standard policy. C. To reduce the overall premiums by excluding certain risks from coverage. D. To outline the responsibilities of the insured in the event of a claim. Answer A. To increase the coverage limits for specific risks not included in the base policy. Explanation: a rider or endorsement is an amendment to a cyber insurance policy that adds specific coverage or increases limits for risks not covered by the base policy. It can extend coverage for things like data loss or cyber extortion that are not included in the standard terms. It does not reduce premiums. C. Or provide a detailed list of responsibilities. D. Although it may clarify specific conditions for a claim. Question 19. Which of the following is not a common exclusion in cyber insurance policies? A. Cyber attacks by foreign governments. B. Losses resulting from a business's failure to maintain adequate cybersecurity measures. C. Losses due to data breaches from third-party vendors. D. Losses from criminal acts by employees. Answer: C. Losses due to data breaches from third-party vendors. Explanation: while many cyber insurance policies exclude losses from certain sources, A, B, D, third-party vendor breaches are usually covered as they can represent a significant risk. Vendor management is often included as part of an insured's responsibility, and some policies offer coverage for such incidents. Losses due to cyber attacks from foreign governments, A, and criminal acts by employees, D, are often excluded, depending on the terms of the policy. Question 20. Which of the following is typically considered a soft cost under a cyber insurance policy? A. Legal fees for defending against lawsuits resulting from a breach. B. Costs to recover lost data following a ransomware attack. C. Notification costs to inform affected individuals about a breach. D. The cost of improving network security after an attack. Answer: C. Notification costs to inform affected individuals about a breach. Explanation: Soft costs are typically indirect costs that arise from a breach but are not directly related to recovery or financial losses. Notification costs, C, for informing affected parties are considered soft costs. Legal fees, say data recovery costs, B, and costs for improving network security, D, are typically considered hard costs because they directly relate to the breach's financial impact and recovery. Question 21. Which of the following actions is typically required under most cyber insurance policies following the discovery of a data breach? A. The insured must immediately pay any ransom demands from cyber criminals. B. The insured must take reasonable steps to mitigate further damage and losses. C. The insured must attempt to recover the stolen data through its own means. D. The insured must notify customers within 30 days of the breach. Answer: B. The insured must take reasonable steps to mitigate further damage and losses. Explanation: most cyber insurance policies require the insured to take reasonable steps to mitigate further damage following a data breach. This could include actions like isolating affected systems, working with cybersecurity experts, or reporting the breach to law enforcement. Immediate ransom payments and attempts to recover data independently are not typically required by the policy. Customer notification (D) is often required, but the timeline varies depending on the jurisdiction and the policy. Question 22. Which of the following statements about cyber insurance coverage for data breaches is true? A. Cyber insurance always covers the full cost of regulatory fines resulting from a data breach. B. Cyber insurance policies generally cover the costs of notifying customers affected by a breach. C. Cyber insurance does not cover legal fees related to third-party lawsuits. D. Cyber insurance automatically covers reputational damage following a breach. Answer: B. Cyber insurance policies generally cover the costs of notifying customers affected by a breach. Explanation: cyber insurance policies often cover the costs of notifying affected customers as part of the breach response. However, they do not typically cover full regulatory fines. Legal fees related to third-party lawsuits are generally covered. C. And reputational damage is not automatically covered. D. Question 23. Which of the following is most likely to be covered by a cyber insurance policy with a cyber extortion rider? A. Losses from a phishing attack. B. Ransom payments made to cyber criminals holding company data hostage. C. Costs related to hiring a public relations firm after a data breach. D. Employee negligence leading to a breach of confidential data. Answer: B. Ransom payments made to cyber criminals holding company data hostage. Explanation: a cyber extortion rider typically covers ransom payments demanded by cyber criminals, especially in situations involving threats such as data encryption or denial of service attacks. Phishing attacks, A. PR costs, C. And employee negligence, D. are not covered under this rider. Question 24. A business has suffered a breach where sensitive customer data was exposed. Which of the following actions is most likely covered under a cyber insurance policy after a breach occurs? A. Loss of revenue due to customers switching to competitors after the breach. B. The cost to investigate and contain the breach. C. Compensation to the affected customers for emotional distress. D. Reputational damage to the brand. Answer: B. The cost to investigate and contain the breach. Explanation: most cyber insurance policies cover the investigation and containment costs associated with a data breach, loss of revenue, A. Compensation for emotional distress, C. And reputational damage, D. are typically not directly covered, though there might be some indirect support for public relations or brand recovery. Question 25. Which of the following scenarios would most likely be covered under a network security cause of a cyber insurance policy? A. A data breach caused by an employee's failure to follow company policy. B. A cyber attack that results in a server crashing and disrupting company operations. C. A legal claim filed by a competitor accusing the business of data theft. D. A third-party vendor breach that compromises company data. Answer: B. A cyber attack that results in a server crashing and disrupting company operations. Explanation: the network security clause typically covers incidents where cyber attacks disrupt business operations, such as a server crash due to a cyber attack, data breaches due to employee negligence, A. Legal claims, C. And third-party vendor breaches, D. might be covered under other clauses, but not necessarily under network security. Question 26. A company's cyber insurance policy includes social engineering coverage. Which of the following is most likely to be covered? A. A hacker stealing company data by exploiting software vulnerabilities. B. An employee falling for a phishing scam and wiring money to a fraudulent account. C. A competitor suing the company for unauthorized use of intellectual property. D. A natural disaster disrupting company operations and causing data loss. Answer: B. An employee falling for a phishing scam and wiring money to a fraudulent account. Explanation: social engineering coverage typically covers incidents where employees are tricked into disclosing sensitive information or transferring funds due to fraud, such as phishing scams, cyber attacks exploiting software vulnerabilities, lawsuits. C. And natural disasters. D. Would not fall under social engineering coverage. Question 27. Which of the following would typically be excluded from coverage under a cyber insurance policy? A. Data loss resulting from a cyber attack that affects customers. B. Losses from a cyber attack that disrupts business operations. C. Costs related to restoring a business's reputation after a breach. D. Legal expenses for defending against a lawsuit from an affected customer. Answer: C. Costs related to restoring a business's reputation after a breach. Explanation: while cyber insurance covers data loss, A, business disruption, B, and legal expenses, D, it typically does not cover reputational damage costs, C, which are considered indirect and harder to quantify. Some policies may offer limited support for public relations efforts, but not the full costs of reputation recovery. Question 20. Which of the following is typically considered a third-party loss under a cyber insurance policy? A. The cost of restoring data lost during a cyber attack. B. Legal fees for defending the business against a lawsuit related to a breach. C. The cost of notifying customers about a breach. D. The cost of hiring cybersecurity experts to investigate the breach. Answer: B. Legal fees for defending the business against a lawsuit related to a breach. Explanation: third-party losses refer to claims made by external parties, such as customers or vendors, due to the insured's actions or negligence. Legal fees, B, related to defending against such claims are covered as third-party losses. Data restoration, A, notification costs, C, and investigation costs, D, are considered first-party losses. Question 29. Which of the following would most likely fall under the privacy liability coverage of a cyber insurance policy? A. A ransomware attack that locks critical business data. B. A company's failure to adequately protect customer data leading to a breach. C. A cyber attack that causes a server failure resulting in business interruption. D. An employee mistakenly emailing confidential customer data to a competitor. Answer: B. A company's failure to adequately protect customer data leading to a breach. Explanation: privacy liability coverage typically addresses incidents where a business fails to protect sensitive data leading to a breach or unauthorized disclosure, while ransomware, A, business interruption, C, and employee errors, D, are important considerations. They are not covered under privacy liability specifically. Question 30. Which of the following is NOT typically covered under a cyber insurance policy? A. Data breach notification costs. B. Loss of income from a network outage caused by a cyber attack. C. Regulatory fines for failure to comply with data protection laws. D. Legal fees related to defending against third-party claims due to a breach. Answer: C. Regulatory fines for failure to comply with data protection laws. Explanation: cyber insurance generally covers data breach notification costs, A, loss of income from business interruption, B, and legal defense costs, D. However, regulatory fines for non-compliance with data protection laws, C, are usually excluded from coverage due to their punitive nature.